The European Central Bank just cut rates for the 7th time in a row, and Trump is completely fed up with Fed Chairman Jerome Powell. In this evening's video, we'll discuss what is going on and how this can impact your Bitcoin and crypto trading. If you enjoy the content, don't forget to smash that like button and subscribe. Let's jump right into the video. So looking at Bitcoin, still very much the same scenario. We have broken above this diagonal trend line, but honestly, it's starting to look like we could potentially roll over here. We saw around this range, right around 86.5 to 87.5K, that we ended up just rolling over after printing those wicks. Now this pattern is starting to look eerily similar despite the fact that we are potentially breaking out of this diagonal trend line. If we can hold this trend line as support though, I do think that we can make it all the way up here and target 86.5 to 87.5K. But this pattern is starting to look like it potentially wants to roll over, similar to what happened over here. So we'll have to see how this plays out. In the meantime, the huge topic is Trump. Now, Trump just talked about how the European Central Bank cut rates for the 7th time in a row, and he is completely fed up with Jerome Powell. On Truth Social, he came out and said, the European Central Bank is expected to cut rates for the 7th time, and yet too late Jerome Powell of the Fed, who is already too late and wrong, yesterday issued a report which was another typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. I wouldn't necessarily say rich. Up until this point, the US has supposedly made around $21 billion on their tariffs since Trump became president. Too late, should have lowered interest rates like the European Central Bank long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. Jerome Powell is really putting up a strong fight because he doesn't believe that rate cuts are necessary. And as we're discussing this topic, the odds that Jerome Powell is no longer in his position by the end of the year just hit 26%, as we can see on Kalsi Markets, which is a betting market. Now, this continues to increase. Now, around a month ago, it was right around 17%. And as this continues to rise, I'm not sure what is actually going to happen, because Powell also said that politics will not be playing a role in terms of determining whether or not they will cut rates and if they will shift monetary policy going from quantitative tightening to quantitative easing. So he's really putting his foot down. We'll have to see how it develops. Right now, at the time of recording this video, Bitcoin is still just chilling around this range, but something tells me that we're looking like we will be rolling over. Potentially we get another big wick to the upside before this happens, but ultimately I am still operating with quite a lot of caution here. I would not be going blindly long. Now, if we clean up this chart a little bit, we are still well below the 200-day moving average as it started to act as resistance. We can see that in March, we actually closed below this level despite wicking above it. And now we have wicked to the 200-day moving average, but we got rejected. And as I discussed, this is a very important level because it coincides with not just the 200-day moving average, but the previous area of support that we held before making a new all-time high, and also the 21-week exponential moving average, which is the bottom of the bull market support band. Now we can see that the top of this band coincides with $93,000, but I don't see Bitcoin hitting this level by any means unless we can break 87.5K and hold it as support. Until then, I would recommend that you operate with caution. Not financial advice, of course, but I'm just sharing with you what I'm doing and how I'm trading this market. I am still looking for shorts. Now, if this level holds, yes, a cheeky long to 87.5K is in the cards, but ultimately, I do think that it's possible that we resort lower. And that reminds me, if you want to trade this market with me, you have the first link in my description down below, which brings you directly to Weeks. You get an incredible 20% deposit bonus, which means that if you were to deposit, say, $5,000 to your Weeks account, you get $1,000 back for free for trading. And this bonus can give you up to $2,000, which would require you to deposit $10,000 and just let it sit in your account, or you can trade with it. Now, the last event on this card here, which I thought is incredible, is that you can also earn up to $28,000 in bonuses based on your trading volume. And something I just wanted to mention in this video is that the spot ETFs are not looking too hot. You know, we had a couple of days of positive inflows here, and now we are seeing outflows. Yesterday, $171 million of outflows. Meanwhile, BlackRock is still accumulating, which is the IBIT spot ETF. I also want to talk about something here, and that is when influencers go on X and say, guys, BlackRock are buying millions of Bitcoins. How could you not be bullish? Guys, these are spot ETFs. What this means is basically the clients are asking BlackRock, hey, can I buy some Bitcoin? And BlackRock are going ahead and buying it through their spot ETF. And so what that means is it's not actually BlackRock as a company trying to accumulate Bitcoin, which is what a lot of influencers are making it out to be. It's only their clients. Now, I'm sure that they have a ton of Bitcoin outside of their spot ETF, but consider that, because a lot of people will try to have you convinced that this is all of a sudden super bullish when BlackRock are buying some more Bitcoin. It's just their clients. Keep that into consideration. Now, something else that I want to show you is the stock market. And at the time of recording this video, if I go on the daily chart here, we can see that we are still red, potentially signaling that the market is still fearing what's going on with the tariffs. It's very much just been a battle between China and the US, and it's been confirmed now that Trump is actually trying to isolate China by making agreements with their other trade partners to block their trading routes, just as we thought that things couldn't get any worse. And I also wanted to touch quickly on Ethereum. Guys, for the long term, in my opinion, we are still in a pretty solid accumulation level. I've been very transparent on the channel since Ethereum was all the way back to $3,000 that my accumulation level would be below $1,600. Well, we can see it now. We are below $1,600. Now, this doesn't mean that we will just immediately pump. We need to see some kind of resolution across global markets, but I do think that this is a relatively attractive level for the short term, and you shouldn't fade this level if you think that Ethereum is a solid project, which, as you know by now, I still do. Now, gold is a very interesting topic that we should be discussing in this video, because gold is trading as if we were in a depression. And what this means is over the last 20 years, gold has now outperformed stocks, up 620% compared to a 580% gain in the S&P 500. The reason why this is significant is because gold is not naturally seen as like this explosive investment as stocks or, for example, Bitcoin is. It's more seen as this safe haven. And the fact that a safe haven is outperforming the S&P 500 tells you a lot. Over the last 9 months, gold has officially surged by over $1,000 an ounce. What is gold trying to tell us? Beginning in 2020, stocks widened their performance gap against gold. However, as equities have entered a bear market, capital has rushed into gold at a faster pace than ever seen before. And over the last year, gold has proven itself as the only safe haven for now. Now, you know this is a crypto channel, and as I always say, I still think that Bitcoin is the gold of the 21st century, but it takes a while for it to be able to establish itself as such. And so for now, Bitcoin is still treated as a risk asset, and if the stock market struggles, in particular tech stocks, Bitcoin will likely struggle as well. Also, US bonds are not as desired. Now, gold has crushed bond returns over the last 4 to 5 years. Since March 2020, gold is now up 114%, while a popular bond tracking ETF, TLT, is down 45%. This is huge. This shift in sentiment has been gold's most bullish development in recent history. So, why did it happen? The answer lies behind persistent inflation and the US deficit spending. US interest expense on national debt hit a record $1.2 trillion over the last 12 months. Funding this debt requires mass issuance of US treasuries. As the US floods the market with bonds, bond prices fall. Makes sense. We saw nearly $7 trillion in gross issuance of US treasuries in just 3 months during 2023. For the entire year of 2023, a whopping $23 trillion in US treasuries were issued. In 2024, mass issuance continued, and this remains the case now. Investors no longer want bonds. And so when the trade war began, it only added fuel to the fire. The economic policy uncertainty index has surged to its highest level on record, and it's not even close. We are now at levels more than triple where they were when Trump was last elected in 2019 during his first trade war. And this was crazy to me. Gold fund net inflows have hit a record $80 billion year to date. This is 2 times more than the previous high set in a full year 2020. We are just at the beginning of 2025, entering Q2. This is insane. Investors are pouring money into gold at a record pace amid uncertainty. Not even 2020 came remotely close to what we are seeing right now. Meanwhile, global net gold purchases by central banks hit 24 trillion in February. Over the last 3 years, world central banks have acquired a massive 3,176 tons of gold. And this is the interesting part. Central banks are calling for a soft landing while stocking up on gold. It simply does not add up. And what you also want to consider here is that imports of physical gold have gotten so large that the Fed has released a new GDP metric. Their GDP Now tool adjusts for gold imports. Q1 2025 GDP contraction, including gold, is expected to be negative 2.2% and negative 0.1% net of gold. Gold buying is at recession levels. And we did hear Ray Dalio come out and say that this could get worse than a recession, which is why on this channel I always discuss the downside possibility, because this is not a bull market like we have seen ever before for Bitcoin. And the last thing that you need to pay attention to with this trade war is that China's holding of gold and US treasuries have moved in complete opposite directions as seen on this graph below. China are stacking gold like madmen. And now we know that this tariff war is very much between China and the US, as so many other countries have already agreed to negotiate a new deal with the US. And as we discussed, the US is simply trying to isolate China. Now, how does this affect Bitcoin? Of course, if we can't find a viable resolution to this tariff and overall trade war, Bitcoin will likely move lower, because stocks are still struggling. And if stocks are struggling, Bitcoin will struggle. I know that a lot of people are saying that because gold was pumping, Bitcoin will follow suit, but this isn't the case, especially with this market uncertainty. I firmly believe in accumulating Bitcoin even at these levels, and even if we do go back to $74,000, perhaps $73,000, as we discussed on the channel before. Ultimately, no one can time the market to perfection, which is why we always dollar cost average into Bitcoin as it heads lower, and the lower we go, the more we buy. That also applies for some low leverage trading positions, because you can always trade the market with this kind of volatility. And once again, if you want to trade the market and take advantage of what's been happening, you have that first link in my description down below bringing you directly to Weeks. All you need is an email and a password to sign up. And as discussed, there's a ton of phenomenal bonuses. So until further notice, the crypto market will be looking like this, in my opinion. I've showed you this picture before, but I just think it exemplifies where we are at perfectly. As always, if you enjoyed the content, make sure to smash that like button and subscribe. Peace.